Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted today to be joined by Dr. Tatiana Mitrova, Research Fellow at the Center on Global Energy Policy, Columbia University. Thanks so much, Dr. Tatiana, for joining us today.
My pleasure, as always.
Great. Well, we have so many things to talk about, and perhaps we'll just focus on 2 or 3 points. What's on the dynamics of the energy markets, because I'd like to sort of maybe dive in deeply into 1 or 2 of those things, like Russian oil, and where that's going, and Iranian oil, obviously, and touch a bit on the geopolitical dynamics. Last time we had you on the show, it was in June, just after we had the skirmishes and the war between Iran and Israel and the US. And of course, the market had responded and reacted since then. But since then, really, things have been a little bit calmer from a price point of view. The second half of the year, we saw oil prices settle into a new lower range. And of course, despite the geopolitical risk that continues, whether it's Russia, Ukraine, in the Middle East, around the Gulf, etc. So as you look towards 2026, we're already in that year, obviously, but what is your outlook for the energy markets from a volatility point of view, from a planning point of view? And would you see that with all the chaos that we see from macro and geopolitics, that the market nevertheless has settled perhaps into a tighter range this year?
Well, that's a billion-dollar
Yeah,
question, as always. Predicting oil prices is really very difficult stuff. What I can say, I believe that we will see a lot of price volatility. Yeah, and
okay.
frankly, what we are observing, I think it's not just simply a sanctions-driven distortion. Uh, I suppose we are witnessing like a broader redesign of how oil markets manage risks, optionality, and power.
Yeah.
And you see, in the traditional oil markets, they relied on supply side adjustments, yeah, with the OPEC spare capacity, flexible production, and marginal barrels to absorb shocks. But this model is now increasingly complemented by the demand side architecture, where large consumers, first of all, China, actively manage inventories, diversify sourcing, and time their market participation. So China, in this respect, is a very important actor by combining domestic production growth and strategic stockpiling and diversified imports, including all these sanctioned barrels from Iran, from Russia, and before that from Venezuela. Beijing is building a very interesting portfolio-based energy system rather than optimizing for the lowest cost supply alone. And in this redesigned market, powers come less from producing more oil and more from controlling options. When to buy, how much to store, which risk to internalize versus externalize. So oil markets are becoming less about equilibrium and more about managed resilience under uncertainty. And that's why we can see very strange situations when actually the markets seem to be tight and oversupplied simultaneously.
Yeah. Yeah. I mean,
So
this
it's a new
tide,
quality.
it is a new quality. I mean, that word optionality, definitely, it's coming up in a lot of conversations that we're having, actually. And that the power, as you said now, is with the consumer, not the producer of oil, in terms of not setting those prices, but influencing the market dynamics. And this debate on what the balance of oil markets at the moment, you've got some people saying there's oversupply, and hence why OPEC has stopped adding, for example, more oil. And at the same time, there's a short-term tightness and a vulnerability that prices could spike if we see, particular geopolitical events suddenly happen. But let's focus a bit on China. You mentioned China, and the stockpiling is one thing that you referred to. That was seen by many as supporting where the price has been at the last 3-4 months towards the end of last year. Of course, it's hard to know what China's taking in, etc. But is that seen as, again, a key support for the market going forward? That is going to be, China will be still the key factor keeping prices where they're at, which obviously means we have to keep an eye on it economically and see what it's doing. And is there evidence in the market that it's continuing to take more oil for storage?
Well, I'll start from your last question. Yes, there are evidences that China keeps building up their strategic reserves, and actually they increase both the capacities for storage. Yeah, they keep
Yeah.
building new facilities at quite high speed, but they also increase the volumes of oil stored there. Nobody knows
Okay.
exactly how much they have in their
Mm.
SPRs and in their commercial reserves. So there are numbers varying from 1.2 to, let's say, 2 million barrels, which is a lot and which is already comparable to the OPEC spare capacity. That's why I'm talking about this new balance evolving in the market when actually there is demand side price power comparable to the supply side power. And it looks like China can survive without any oil supplies, not for several weeks, but for months and months, which is completely new geopolitical factor as well. So this infrastructure is for sustained influence, not for a
Absolutely.
temporary shock absorption, peak shaving. Yeah. And I think that China is really increasingly moving from adjusting demand flows to real effects on price. So we don't see it yet happening, but the very fact that China has such an enormous market power, not
Mm.
the whole OPEC together, but just one single country, that's an absolutely new factor, both for the market dynamics, but also for the global geopolitical landscape.
Of course. Well, let's talk about then China and Russia's relationship because that's part of OPEC Plus. And particularly in the last couple of months or more, it has been taking up more Russian barrels, for example, and away from India, which was the other main buyer earlier last year, which began to take less because of the trade negotiations India was having with the US. Of course, China is also having trade negotiations, but it's arguably in a stronger position. And it has been seen to be taking quite a lot of more Russian oil as the months have gone on. So where does that put China-Russia relations and China-US relations, do you think? How is it balancing those two strategic dynamics quite well?
It's indeed a very strange love-hate triangle. Russia,
Yes,
China, US, and obviously Russia is playing secondary role in these relationships. So for the world, of course, this confrontation between China and the US is the most essential factor which defines all the geopolitical and economic developments these days. Russia has aligned with China. There were several attempts last year. Remember all these negotiations between Putin and Trump, the visit in Anchorage and so on. But you see that actually so far they didn't result in any Ukrainian deal, in any large economic deals on joint Arctic development or whatever they were
mm,
discussing. Yeah, so I believe that basically Russia has chosen to keep this alignment with China. And simultaneously, it has put itself in a very dependent position. So China has huge leverage over Russia, while Russia doesn't
yeah,
retain any meaningful leverage over China. Yeah, so this relationship is structurally buyer dominated. China
ab-
has scale, rising domestic output, diversified supply options, and expanding storage facilities. So Russian barrels for China are just an option, not a necessity. It's like nice to have at low
absolutely.
price.
And the other supplier to China, of course, is Iran, and it has been the main intaker of Iranian crude and continues to be, as far as we know. And that has, that's obviously an option for China. Which, again, I mean, from a sanctions point of view, U.S. sanctions on Iran and on Russian crude more recently. We see Trump at the beginning of his presidency a year ago was talking tough on Russia, but really doing nothing about sanctions and doing the opposite. That rhetoric has somehow uh, toughened a little bit, for example, on the India front, stop taking Russian oil, etc. Do you feel that we will see more stringent sanctions on Russian oil effectively impacting Russian flows as the year goes on? We've got the midterm elections in the US, etc. Trump wants lots of oil. I know he wants low prices, but there has been, he's using that a little bit, it seems, with India, for example, on his trade negotiations. Do you think the sanctions enforcement by the US will change this year in any way?
I would say there is not very high probability
Mm.
for that. Rhetorics is one thing, enforcement is quite different thing. And so far, actually, during this whole 4-year period of Russia at war, we didn't see really tough enforcement for the Russian barrels. And with India, you've mentioned this case. Indeed, there were very recent statements that Trump announced that India completely stops importing Russian oil. I mean, I am very skeptical there.
Okay.
Yeah, though Reuters reports that April deliveries are down, but actually Nayara refinery is on maintenance in April. But then this refinery co-owned by Rosneft, it will keep importing Russian barrels for the domestic use. Yeah, so I think there will be still lots of workarounds through all these Asian and Middle Eastern blending hubs. And, there are many
Yeah.
ways which it is like if people have entrepreneurial spirit and if there is any premium that they can grab, they will find the way how to move these barrels, these discounted, more and more discounted barrels,
Yes.
which makes temptation even higher. So sanctioning Russian oil, it works only if all the potential consumers are aligned, which is
Absolutely.
not the case.
Well, what about Russian gas? And from a Europe perspective, I mean, obviously we've seen more US LNG come into Europe. The US is pushing its gas globally, it's sort of energy dominance agenda. And Europe, of course, plans to stop in completely Russian gas intake in 2027. Do you think that's going to really be possible for Europe? And are we en route to that?
I would say, yeah, in the current global gas market situation, it's doable. At the moment, Europe is already receiving gas only, Russian gas only via Turk Stream. So all the supplies through Ukraine, they've stopped a year ago. So there has been already a lot of adjustment and adaptation in the European gas market. The LNG market, like 3 years ago, it would have been nearly impossible to replace Russian LNG going to Europe. But these
Mm,
days, with this new LNG wave, new LNG glut approaching, there are plenty of opportunities how to replace it. Russian LNG will go to China and LNG from elsewhere will replace it in the European market. So I don't think, except for a couple of countries like Hungary and Slovakia, which were very resistant on banning Russian gas.
yes.
Yeah, so they didn't prepare for this. But basically, all the others are quite in a good shape. So I don't think that we are going to see any catastrophic circumstances, except for any severe weather events. So this heating season is nearly over. Europe has very low underground storage gas level. Yeah, they will have to replenish these gas reserves during the summertime. And then if there is no severe winter, I think
Mhm.
they should be fine.
Okay. I mean, let's talk a bit about OPEC plus, Dr. Tatiana, just in the context of sort of Russia's, again, I mean, as a group, but Russia's obviously been a member of that, and that relationship with Saudi and with the key OPEC Gulf producers has continued. They've compromised. They've allowed Russia to do what it needs to do. And like one or two other members within the OPEC Plus group, those at war under sanctions, etc. They can't really be part of the calculations for the group going forward, at least for now. With what's happened in Venezuela as well, we haven't talked to you since then. Do you feel that OPEC Plus increasingly is becoming irrelevant as a group? I mean, you just said also the buyers are becoming the bosses, aren't they? China, etc. And you've got the US pushing its energy as well and other non-OPEC producers. Where do you see that group consortium in its sort of market management going forward?
Well, OPEC Plus formation was quite painful and difficult remember back in 2016,
Yeah,
2018, then all this disaster in 2020 when actually it evolved finally. So it was a necessity for the producers. It was basically the only acceptable outcome to keep some power in the market. Yeah, and OPEC itself, I mean, the core OPEC couldn't already execute this power, so they needed
of
certain
course.
enlargement. These days, when the situation is becoming even more unpredictable and difficult, I believe that keeping aligned makes a lot of sense for the OPEC Plus participants. At least on the Russian side, I would say this alliance really saved Russian budget. Without it, back in 2022, 2023, it would have been absolutely impossible to redirect so fast all the volumes from Europe to Asia to find market in Asia, yeah, and to keep the exports flowing. So I believe that Russia has a lot of gratitude and respect and
Interesting.
also fear because they remember quite well the price war with Saudi Arabia back in April 2020. Nobody wants the repetition. Yeah, so I think there is a strong rationale for the group to keep together as long as it is in the interest of Saudi Arabia. You remember historically there were periods when Saudis were making their choice more in favor of market share rather
Yes,
than price stabilization. So we see that currently with 60 something dollar per barrel and the budget price for Saudis at $90 per barrel, the government shouldn't feel very happy and
yeah,
healthy. Yeah, so there might be certain change in the, I don't want to speculate, I don't want to say that it will happen, yeah, but there is an opportunity potentially. Yeah, and looking also at what is happening with the non-OPEC producers. Yeah, first of all, looking at Brazil, Guyana, and the others, but also these
mm,
big question mark how fast the revival of Venezuelan oil will happen. Yeah, this is really quite a challenge for the stability of the whole OPEC Plus, whether they would prefer to keep together going through this new difficult price cycle or whether it will fall apart. If it will fall apart, then definitely Saudis are the winners, as usual, with the
of
lowest
course.
cost of barrel. For Russia, that will be a disaster.
So the Russians have benefited tremendously from the OPEC plus thinking and planning. Dr. Tatiana, I mean, as we wind down, I'd like to get your perspective as we start this year on the Russia-Ukraine war. I mean, as you said, Russia's budget was saved by the fact that it could resell its oil into Asia. Its oil industry is under attack physically, and obviously from a maintenance point of view, certainly there must be challenges there. How bad is the pressure on the Russian economy today? And is that in any way, do you think, going to push Putin towards any compromise in these peace talks that intermittently are happening? Do you see a solution to this war this year, or are we going to continue in the stalemate that we're in?
Unfortunately, I can respond only in the terms of probabilities. I wish I knew the exact number, but I don't. There is this choice for the Russian leadership between their geopolitical ambitions. which are very clear. They want these Ukrainian territories, Donbass, Lugansk, which are the most difficult part of the negotiations. And they don't want to agree on any deal without these territorial concessions. On the other hand, as you've mentioned absolutely correctly, the Russian budget starts to suffer. It was extremely resilient, by the way. I mean, 4 years it was pretty stable. But now, I mean, in 2025, due to the global oil price decline, federal oil and gas revenues, they fell by one quarter. In January 2026, they were already 50% down year on year. Yeah, it is felt. Russia still has national financial reserves. Yeah, so it doesn't mean that it's collapsing.
Yeah.
The economy is slowing down. It was showing like 4 to 5% GDP growth back in 2023, 2024. Now it's down to less than 1%. Yeah, so the pressure is felt, but still it's not a catastrophe. Russia can keep muddling through for another year or 2 or 3 while Ukrainian resources are nearly exhausted. Yeah, so it's the war of attrition. And
Yeah.
the question is who will collapse first? I have strong suspicions that it will not be Russia. Russia still can afford to sacrifice its economy and level of life for another half a year, 2 years, yeah, in order to get this geopolitical win as they see it. Well, whatever will prevail, yeah, the economic rationale or this geopolitical passion to make Russia great
Yeah.
again, I don't know. But I hope we will see in the next few months because Trump administration made it very clear that either this conflict should be resolved before May, or they will switch to the other internal issues.
Yeah, and of course, before his midterm elections, most
Exactly.
importantly for him, of course, it'll all depend on what the US and European position is also from a funding point of view and whether there's any change there. Dr. Tatiana Mitrova, thank you so much for joining us today and giving us your perspective as we start 2026. It's always wonderful to have your insights.
Thank you so much for great questions.